Hey there, welcome to a video training session. In this training session, we will look at setting up a trade. We will look at an aggressive approach, a conservative approach, and a real trader approach. Here we have two higher lows and two higher highs. We connect the two higher lows with a trend line, creating our rising support line, and we place a horizontal line at the second high, creating our resistance line. The aggressive approach is taking the height between the first low and the resistance line and project this to above the resistance line as we are looking for buy opportunities. Taking a look at the conservative trader and real traders approach, we will take the height from the rising support line to the latest high resistance area and project this above the resistance area as we're looking for buy opportunities. So there we have it. We have our conservative target projection and our target to our aggressive target projection. The entry is calculated as from the modules in level 2. And the question is normally, where do we place a stop loss? So in trading, you should never take a position without a stop loss. Now in this case, we're going to place a buy order to execute our low entry, and we will place a stop just below the rising trend line, like so. Here we have our trigger candle, a buy stop order executed, placing our stop below this line at this point in time. And because the trigger candle didn't move directly to target 1, we're going to manage our risk and move our stop to just below the rising support line again. As you can see, it's just below the simple moving average as well. The price moved up, reaching target 1. The conservative traders closed a full position. The aggressive traders are still in this trade, not closing any positions as they're waiting for target 2. And your real traders are closing 2/3 of the position. So they're taking profits off the table, and they're waiting with 1/3 to still have market exposure. If this market moves up, they will still be in this trade. As professional traders, even if you're an aggressive trader or real trader, then you need to manage your risk. And in this case, for the aggressive trader and the real trader that still have positions open in this specific trade, you're going to move the stop loss to break even. So we move the stop loss to break even, so whatever happens, if this market comes back and back to the entry area, they will not lose any money. The price remained in the area of target 1 as traders took profits. It started to fall back up to this rising support line, where the traders that are still in the position with 1/3 took their profits, and the market then retraced further back, reaching the entry area, the stop loss, and took out the aggressive trader at a 0 profit. Then the market found support, and we can see the support areas in the same area where the previous resistance was, and that's a change in polarity principle. See level 2 modules. In this video, you have learned to set up a trade, manage your risk by moving your stop loss to increase your reward risk ratio. And we looked at a conservative trader approach, aggressive trader approach, and how real traders deal with the price in a moving market. Thank you for joining us. See you next time.